Hi, everybody. Sunday, September 3rd. I hope everyone's having a great long weekend in Canada and in the United States. Wanted to give you some perspective and show you some charts and some other data. I'm actually working this weekend. You know, it's usually a weekend where I would have chilled out, especially with the sort of drawn out summer that we had in the mining sector and also with gold and silver. But I just want to be very clear to everyone that things have changed, and they're going to change more in a pronounced fashion to the point where I don't think a lot of people get it. And most people don't get it. Most people are either sleeping, you're looking the wrong way, or you're looking at a very limited potential upside for this sandbox that we play in. And I wanted to relay my confidence because what has happened recently, as most of you know and have been following what I've put out there on this massive breakout that we've seen on really all charts, but the main one being a 7-year downtrend line and 10-year triangle pattern in the price of gold. This has essentially confirmed my view. And when I get confirmation from the market, especially with something this big, and I don't think that people are really portraying what a big deal this is. You know, you see some folks that will talk about the breakout, and then in the next breath, they're talking about resistance at 1330, 1350, 1375. Some of that's true, but it really is, it's very short-sighted as it pertains to what I want to paint a picture for my subscribers to really consider. You know, this is a game-changing situation right now. And just as a little bit of history, if you go back over the course of 2011, which is when I launched this newsletter, it was September, I believe, 2011, literally the top month in the market for gold and silver and mining stocks, which really turned out to be the biggest blessing in disguise that I could have ever hoped for, because at that time I was ill prepared, you know, starting a following of basically just my clients from when I was a broker, not knowing a ton about marketing and not having any name in the newsletter business. It's given me years to build trust, build relationships, and to build my subscriber list, and also, and most importantly, to build my exposure and my positions in this sector. I do practice what I preach. In fact, I don't talk about stuff with you, ideas that I don't own myself. It just doesn't happen. Why? I am in this sector because I believe in it, and I'm in this sector because I love it. And, you know, when you look at what happened from 11 until early 16, as a reminder, you know, we saw the most devastating bear market in the junior miners and the mining stocks and the gold and silver miners that we've really ever seen on record. And the price of gold itself only came back, I think it was about 45% or 44% or something like that from the 2011 highs. But the mining stocks in many cases were down 90% and some even more. And I'm going to show you what I want to talk about a little bit. I'm going to get to this at the end, but I'm going to show you some purchases that I made in my own personal account in late 2015 and early 2016 under a penny a share in a junior gold explorer that we've talked about here, and that not only premium members who had months to buy it at the same price, but even free members were then revealed to pick at, you know, a penny and a half, 2 cents, I think it was. The stock closed last week. I think we're up about 18x. I'll have to look at the exact close, probably around 16 cents. And just getting started, that's the thing. You know, if we're just starting this next bull phase, the leverage in these smaller stocks is incredible. But the only way that you're going to end up making a lot of money in the sector is if you take action at the right times and in the right ways. It's the biggest challenge for someone like me who really works for you and you come to for a viewpoint. And what I'm going to try to do in this update is be as clear as possible. You know, I have no problem putting myself out there when everything aligns and I get that feeling. Uh, what I wanted to say too, and I'll get back to that penny stock, but you know, I was recommending for a long period of time to chip away and accumulate positions for years, 2014, even probably back in 13, 15 for sure, really feeling that the end of the bear market was starting. We were starting to see the light at the end of the tunnel, but I never said, oh, go all in, go put it all to work. But I'm actually saying that right now. I think that now, based on what we've had with this confirmation, you need to take action if you want to make a lot of money in the market. If you want to, play in this sandbox, when we get signals like we just got, you have to take action, and you have to do it in a way that's going to be meaningful to you. I don't care if you're a billionaire listening to this, which we have on the Gold Investment Letter subscriber list, or if you're a really small new investor. You've got to take action early in a cycle and then be able to maximize those gains by holding and sitting on certain positions for the duration of the cycle, which is why looking at really short-term investments as a core strategy is futile. It just is never going to make you big money. You hear the stories, I play a lot in the penny stocks. You hear the story of the penny stock riches. Well, I've had 25 baggers before, and I think this particular stock that I'm talking about, which is Gungnir, by the way, I was buying it actually at a half of a penny. I remember there were days and weeks when I was the only one that had any volume in this thing, and then when I shared it with others, some people bought, but the move was so bad. I was still the only guy in there buying, and I didn't put a ton of money into it. I mean, this is money that was doable for probably 90% of anybody listening to this that invests money. I mean, probably even more. I mean, it was like less than 10 grand. I think I put in $7,500 US, as you'll see on the attachments, which is now worth it's worth a lot more than we even know, because I was able to sell that position at a profit when the stock first made a move to 5 or 6 cents, and then put that into a private placement at 3 cents, which includes warrants at 5 cents. So now I have millions of shares, essentially, at a cost average of 4 cents, which started, it was all financed with the purchases that I put in at a penny. Really, it was 0.009, as you'll see, was my cost average. It's less than a penny. And now with the stock at these prices, it's worth over 300,000 Canadian, and it's probably going to turn into like $1 million. I mean, this has started with $7,500. This is why this sector is so exciting, and this is why we play in this arena. And so anyway, I think that one of the things that I really just wanted to get on and even talk into the screen before I go on to some charts is to relay the feelings that I have right now. The feelings are, and this is really as a speculator at heart, as an investor, as a trader, this is the stuff where there has only been maybe a handful to 2 handfuls of times. I became a stockbroker at 21. So I'm 42 right now, so half of my life. And I would say that the amount of times where I felt like I am now, where I just know I'm about to make a ton of money. It's already done. It's money's in the bank. It's just a question of how much and how long does it take and how high does it go. And I don't like to put a cap on that because we're really early in this action. I'm going to point out that it's not only not too late, but it's ideal. And the pricing on this stuff is still fantastic if you know where to look. So I'm going to take a swig of Red Bull, which is keeping me going here this weekend. But I had 2 situations that came to mind when I was thinking about this weekend. One was I have this for some of the newer subscribers. I talked a little bit about when I was younger. I ended up moving to Chicago to become a broker. It ended up being a boiler room that I figured out pretty quick. I mean, I didn't stay there very long, but I got my Series 7 license and I learned how to sell. And then I went to a real firm with real brokers that had come from big board firms, and it was a little crappy boutique though. And I ended up making hundreds of phone calls a day trying to build, my book of business because I had nobody in my entire family had any money ever, except for maybe my grandmother, which saved me when she passed away and gave me the bridge financing really to go and start this life and give it a shot. But essentially, I had grinded out every day and started to build a position in a company called Motorcad. And the managers at my boutique and all the other brokers, we loved the stock. And we ended up buying warrants and the common stock. And then the stock ended up going from like $4 to 10, and the warrants went from $1 and change up to $4 or $5. And then instead of taking the payday and saying, hey, clients, let's get out of this thing and I'm going to finally be able to, pay my bills for once, making minimum wage, literally, and if my commission wouldn't clear it. And basically, we ended up having the clients exercise the warrants, buy more stock, load up, but this took a period of time. And it was around that area when I had to face that temptation of just blowing out to make my bills. Right before that, I was evicted from my house, and I was down and out. I mean, I literally had to sleep. I luckily got to sleep on a friend that I had met, parents' couch for weeks. And then I made a decision. That decision was that I was either going to go back to Wisconsin, and I felt like I would be stuck forever, or I was going to stick this out. And this hadn't happened where that stock popped yet. It was months before that. But I made a decision that if I had to, I would go live at the YMCA in downtown Chicago on Chicago Avenue with crackheads if I had to. And I made the decision, I'm going to gut this out because this deal is going to work. And long story short, the stock ended up going to $25. We made millions and millions of dollars for customers. But there was, at a point in time, part of the reason I made that decision was because I knew in my bones that this thing was going to work out. I was very young. I didn't necessarily know how to analyze stocks, but there were things that were happening that were keeping me, my conviction was building. And I really, maybe my eagerness and ignorance was a big positive at that time because I didn't have a lot of failures to look at and say, we could be getting scammed or whatever. So in any event, I had that feeling and I rolled all the dice on this thing and it hit and it changed my life. And it created, basically gave me the window to then continue a career in the brokerage business. The second time I had this feeling was in around 1999. After the 98 crash, which was the Russian ruble Asian contagion situation, the markets took a hit in the United States. I had taken a hit. I think that particular company, Motorcad, had gone, we thought it was going to 100. So barely took a lot of profits. We should have taken it all off. Lesson learned. But that stock went from 25 and then back to like 7. And so margin calls were had, and I, basically stuck with it. It ended up going back to 25, back down to 8, and they got bought out for $17 by Barry Diller. But in any event, so with that roller coaster, I ended up making a move to another firm. It was my first real move where I had some clients. And I was really starting from a low point. And every day I would buy this one company called Altnet. I would just make it a goal that regardless of what had happened and that I had a small book of business, all the calls that I was making to new clients, I would get more of my clients to buy this stock. It was like $1.50 or so for a long period of time. And the internet piece was starting to come into play. And I remember that in October of 1999, I was going on vacation to Oahu with my best friend who was also my assistant. And I took a business card and I took the top 10 clients that I had and I wrote the account value. This is before, super technology was readily available to, even take a picture with your phone. I wrote it on a business card and I taped it on my desk, not on my desk, on my wall next to me. And I remember, for example, one of my bigger accounts at that time was worth like 85 grand in all stocks. And it was a gentleman who worked with me out of Colorado. He was an executive with AT&T. And when the internet hit, the whole situation, when the stocks took off, I felt it. I knew it was coming. Things were going to pop. I could feel it. I knew it. When I got back from Hawaii, I tried to get everybody to do as much as I could. And then that's when Y2K was coming up, and everybody was worried about it. And I ended up buying into this idea that instead of being a meltdown, it was going to be a melt up. I really felt like this was not going to be big enough to affect things, and that when we got past it, it was actually going to cause this melt up in the internet sector. And so, I mean, I started buying any and everything that I could. And for example, we had this company called Land Optics that my firm covered. George Soros was involved. It was an Ethernet company trading at $4, 4 and change. I decided to start buying it. And the day that I started buying it, I think we bought maybe 10 or 20,000 shares for clients in the fours. It popped to $8 on the day. And then it ended up coming back down into a little bit of a lower level, and I bought a lot more. And long story short, I think it was by February, it might have even been, it was by February, somewhere around there. We're talking 90 days, the stock hit $44 a share. Literally, I had myself and clients that had bought it at 4 1/4, at 430, 440, and we're up 10x in 90 days. That company Altnet went from $1.50 to $10.50. I sold my whole position, I think almost all of it, at 6. The stock pulled back to 4. We bought all of it back, and then the thing ran to $10.50. I mean, it was basically printing money not only as a stockbroker, and I wasn't as much of an investor at that time because I just didn't have the capital. Now I do, and now it's serious business. And so that's what we're dealing with now, and I want to show you some information and some links to share with you why I feel so confident. These are just a few things that you can look at and consider. But I've talked about this over and over, and okay, it looks like the chart's up on point. This is a 10-year chart. One of the most basic things with technical analysis, and you don't have to worry. I mean, listen, I use a combination. I probably lean more towards, I'm probably 70% fundamental in terms of looking at bull and bear markets in certain sectors and certain specific companies that I feel like the business is trading at a cheap valuation versus technical analysis. But I use both. I think it's the perfect adage that fundamental analysis is knowing what to buy, and technical analysis is knowing when to buy it. So they go hand in hand. And one of the most basic charts that I've always made a lot of money on, with trading especially, but also in this case, it's going to be helping our cause on a long-term theme as well, is this triangle pattern. When these things happen, when you have a flagging pattern, it happens a lot. And we're going to see these, I'll try to pull up a real-time example of something that has happened. Maybe I can do it right now, where you see these flags that end up kicking into gear. And I'm going to talk a little bit more about this particular company recently, but this is more of the flagging pattern that you've got here, and it hasn't really stopped much. But here you would have a triangle, boom, 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 boom. So these triangle patterns are very basic in the sense that 75%, 70%, somewhere in there, 80%, it's not always guaranteed. You don't know which way it's going to break. But 70, 75% of the time, it breaks in the direction that it is continuing on the trend. And so in this case, even though this is a downtrend on this side, the actual trend over 10 years, because we start back here, has been higher. And so one thing I'll say is that the reason this is such a big deal is that when you see a consolidation, typically the shorter the consolidation, the lesser of an explosive move higher that you're going to see. The longer that the consolidation occurs, the bigger the reaction after it breaks out or breaks down. And this is 10 years, folks. I don't even know if I've seen anything like this before. I really don't. This is huge. This is where gold is going minimally. Yes, it's true that there's some resistance at 1330. There's definitely going to be resistance here, which is the previous high of 2016, 1375, 1380, somewhere in that area. I don't know that it'll go through there right away. I think we'll probably even test that in the next couple of weeks, and then we'll have to maybe even get a pullback to the top channel, which is very common, which could shake people out and get them back down to even under 1,300, where people get scared, and then there's the final rip that could happen. But I think we may not go through this like butter on the first try. It may take another one. But once that's gone, there's all these different intervals here, but we're looking at 1,500. And I think, you're going to see some other evidence. The minimum we're looking at is a move by mid-summer next year to September of 1,700, 1,750. But what I believe, based on this breakout on the monthly, which is enormous technically, we're going back to what typically happens is testing the previous high, and that's $1,900. Can you imagine where Timberline Resources or McEwen Mining or Gungnir are going to be trading when gold's pushing up against $2,000 after these deals were bombed out 90% and washed out over 5 years? This is going to be a violent move, violent. And you need to make sure that you're at least open to the fact that this market is going to look like this, which is Bitcoin. If you don't think that gold and silver can make parabolic, enormous, ridiculous moves higher, you're mistaken. Bitcoin last year at this time was trading for $600. I've documented this. I didn't buy a lot, but I started to buy Bitcoin in that area, and it just hit 5,000 in less than a year, about a year. You're talking about a 10-bagger in that period of time. It's a smaller market, but these things can happen. And really what I think with the Bitcoin situation and the cryptocurrencies, the reason that it's bullish for gold and silver is that it's showing that there's a big appetite for non-fiat currencies. And fiat is part of the issue. It's part of the central component of why you want to own gold as a store of value, which has been used as money for 5,000 years consistently, as well as silver, a monetary metal. And we're seeing a lot of this action, but it's also really giving me flashbacks of when we had that bubble going on back in the internet stocks. It could go a lot higher, but it also could crash, and people are going to get hurt on the cryptos in time. There's now people talking about it going to 1 million in 10 years and stuff. You hear that type of chatter. It's getting later in the game than it is earlier. But what happens after that? People still want an alternative to fiat. They're going to go to the trusted money of millennia, and that is gold and silver. But let's look at we had the big breakout in the price of gold. Next is, if you think you're too late, because last year we had a violent move in 2016, January, where we saw the miners triple in a very short period. That was a big, big, violent move. And that's what we're going to see again, I think, very soon. Like literally, it's starting now. And essentially, and this is also very bullish, this flagging pattern on the monthly, which is being broken out of. And I'll show you that in a second. I'll put the real time. I'll do it right now, actually. If you think you're too late or you missed the bottom, who gives a crap? The smart money and the best traders and speculators and investors in the world learn to pyramid in bull markets, meaning you continue to buy on dips as something goes up because you realize that the market is proving you right. And that's one thing that I'm actually very good at. And it's the reason why, I don't know if I finished the statement, but that particular client where I had the account values on my wall, he went from under 100,000 to I think we were up to like $1.28 million. I had other clients that were up anywhere from 8 to 15x, depending on how active they were. I pyramided the hell out of our accounts on margin and got very aggressive. And I didn't have the experience at that time to know when to get out. So we gave a lot of that back, admittedly, in 2001 and 2002. But we made a lot of money. I mean, big money and fast. I mean, it literally happened in like a 6-month period or less, where these accounts went from, 80 grand to 1.2 million. So in the right market and in the right environment, you can make a lot of money. And gold and silver, this is the reason why we're in this sector, is very volatile. It is volatile and dangerous on the downside, and it is volatile and violent on the upside. And that's what we're about to see. And if you think you got in too late, now is your second chance opportunity to buy into the miners. The usual situation when a trend changes like this is to, again, go and retest those old highs. It could take a few years. It could take a couple of years. What does it matter? If you're buying GDXJ at 36 and then you end up having a chance to sell it at 140 or 150 bucks, I mean, it could take 10 years and you'd be happy with those returns. They're extraordinary. But it also could happen in 2 years. It could happen in less. So that's another thing that we want to look at here, is that when you take a really long-term chart, and this is going back to 2001, which is when what I believe the secular bull market in gold that we're probably still in. It doesn't really matter. I mean, the fact is that we're starting a cyclical bull market that will last for at least years. But I think that this is probably a continuation of the secular bull that started here, that ended in a mild euphoria here, but not this type of euphoria, and that's what's coming. But the XAU, which is the Philadelphia Gold and Silver Index, has been around for a long, long time. Great measure of gold and silver index for mining companies. And if you look at this right here, where we are today, we're basically, you can draw that line back to 2002. We're trading at levels of 2002, 2003 in the XAU, and gold at this stage was trading at about 400 bucks. Maybe it was it was 400 bucks. This is $400 gold. We're buying the XAU at $1,300 gold on a 10-year triangle chart breakout. The best possibility of all worlds that we have is the situation that presents itself today in gold and silver mining stocks. This is going to be fun, guys, and I hope that a lot of you take this seriously, and I know many of you will. I'm not promoting. I'm just talking about what I see, and I'm talking about what I feel, and I think I'm going to be I'm going to be right. The question is not, it's not even a question. Say, for example, we talk about, let's talk about McEwen Mining. It's not a question of whether we're going to make money buying it at $262 a share. The question is going to be, where do you sell it? That's going to be the hard part. Are you going to want to sell it when it goes back to 10? Are you going to want to sell part of it? Are you thinking that at that time everybody's so enthusiastic? And I believe ultimately, like MUX and GDXJ are going to best their 2011 highs, because gold is going higher than 1900, and it's already purged this sector for when that time comes. But it's going to be a question of when you're at that point and say gold's at 2800 and you have a MUX that's trading, and listen, I actually think this is very possible. What if Amigo Mining's trading at 80 or $110 a share? How many of you would have held on to that stock at 40 bucks a share? Call it 28. Very possible, I think, actually. Then the question is, you're dealing with fear and greed, and you're saying to yourself, does it keep just going up? Because it's going up every day. That's what happens in a euphoria stage of a bull market. Look at what's happening with Bitcoin. Right when you think, the party could be over, here, back here, but here and here where this has gone parabolic, and then there was a big pullback recently from 4,400 to 3,600. These things are going to happen, by the way, folks. We're going to get shaken violently. So you have to have your head screwed on straight, and you've got to be invested mentally and emotionally into what's going on, and have some clarity on at least your goals with certain parts of your portfolio. Know which investments are investments to hold for what we feel is the duration of the bull cycle into close to somewhere in the ballpark of the top of when we're going to sell the bulk of our assets in gold, silver, and mining stocks, and that day will come. Which ideas are trades? If you go into it for a trade and it goes down, get stopped out, and don't turn it into a hope that it's going to come back investment. Having these clearly defined parameters is very important, and that's actually one thing that I feel like I can help with quite a bit. Let's go to I don't know if I finished my thought there, but just to move on, look at what happened in the 70s. Just keep this in mind, because one of the things that I don't think that people are really comprehending right now is just how much higher this stuff is going to go and how fast it could go. It could get crazy. You look in the 1975 time frame when gold, which by the way, when you do the math from 35 bucks, I'm just going to do this really quickly. When we got off the gold standard in early 1970s from Nixon, and then gold moved up to almost 200. 200 divided by 35. So we went up almost sixfold in that time frame over the course of call it 5 years. The market in and this doesn't show it on the chart, but so if we talk about, it was a little under $300 in 2000, say 2001. Let's just call it 300 for the sake of doing this, really what is a fractal analysis, looking at what happened in that last bull market and putting it on this one. You multiply it by 6, you get 1800. So we went up a bit more in that time frame, and that was over the course of 10 years instead of, so it took twice the time, but it's all very analogous, because after that happened for us at 1900 and whatever it was that we topped out at in 11, we pulled back almost 50%. We went down about 45% and hit the low in early 2016 at 10 whatever gold. This is what happened in 75. We had a 50% decline. So say we were right here, we're probably about right here, because we had that rally. 800% run. That's like GDXJ. 800% run from the lows. I think it was about 18 bucks times 9. So that would take GDXJ back to $162. So if we mimicked, that's from the lows here. So if we mimicked the 70s, which I think this is going to be much more powerful than the 70s, but if we can look at this as a very tangible example, that would put us back at the highs on GDXJ. That's when a lot of decisions are going to have to get made, by the way. Those are the points, and I'm just going to show you here. This is the flag pattern I was talking about. Breakout right here, very bullish. Actually, I don't know if you can see this or not, so I'm just going to save it real quick. But in any event, I don't know why this isn't saving. Do you see it there now? Yep, there it is. Flag pattern. These are technical basics, but in any event, this is the type of stuff that I think can happen. And so what I'm getting at too is that there are times, most of this stuff with investing, 80, 90% of the time, you don't need to do much. It's a lot of waiting, it's a lot of sitting. That's what investing is. But there are times when it requires action, when action is paramount to what your future success is going to be. And when you get evidence like the market is giving us right now on the miners and on the price of gold, you have to take action now to get the best prices with the lowest amount of risk, because we're still off on the muxes of the world 50% from those highs last July. Over a year's gone by and we can buy it at half off. And we just had all these bullish indicators triggered. You go long now. Go long a lot of this stock. You go long a ton of NovaGold. This is for my wealthier listeners and readers. These are the type of stocks where, they're not super, super tiny juniors, the billion-dollar market cap type companies, they're also going to move big time, in a gold bull cycle. So going back to the 70s, this is what we saw. And so can we see that again? I think it's going to happen. Look at this, the data from, and I want to make sure you guys are seeing this. This is a Merrill Lynch piece of data. It's a private client allocation of precious metals ETFs as a percentage of assets under management. The source is Bank of America Merrill Lynch. Here's how, so look in 2011, and again, they increased and they stuck around late. You're seeing the highs of allocation at the top of the market, 7%, 8%, 9%, 9%. Right now, 1%. Do you know how much money can move off the sidelines into the sector once it starts going? It's going to move big. Next, so I wanted to show you some of these charts and some of this data, which I think is important. One last one I'm going to show you is from the Daily Gold. This is just a gold bull analog that really doesn't even deal with the 70s, but it looks at just cyclical bull markets from the 80s and 2000s and 90s, just typical stuff. So the 2015, we saw the start of it, called it 10/31/15, right in that beginning of January timeframe, and gold hit its low in the black. And here's where we are today in September. If you look at 2001 to 2004, if we mimic that activity, then we would be at about $1,700 an ounce, maybe a little bit higher than that by September of next year. 1 year from today, 1,700. Is it doable? I think it's actually likely, very likely. So then we look at 85 to 87. This was in the bear market bounce for a new cyclical bull market. Didn't last super long, but the move up percentage-wise that would be mimicked, we'd be looking at about 1,750. I don't know the exact number here. It's not that clear, but call it 1,700, 1,725, whatever that is. That would happen earlier. That would actually occur by midsummer next year instead of September. So there's one other example, which is 93 to 96, which was just a crappy market. Didn't have anywhere near the washout, and these things have inverse correlations. When a sector gets bombed out dramatically, the bounces are bigger because there's less supply of areas to invest in, so it's more magnified. Just common sense. This was a more muted move going into the early 90s, so I really don't see that as being a likelihood at all. But look at, do it as a mixture. You're talking about 1,600 probably if you averaged even all three of them together, $1,600 gold by next summer. It's going to be a different environment, folks. I mean, for the junior mining stock. So real quick, I really want to use this as an opportunity as well. I don't plug my premium and elite membership all that often, talk about it a bit here and there, but it's important for those of you that are on my free list, which are thousands and thousands of people, to realize that if you're buying into what I'm saying and you're trying to save $47 a month by not having a premium membership at $500 a year, what are you doing? I'm going to show you proof here with the Gungnir that in that case you could have put 70. This is just one case, but listen, if you have one Gungnir, I could lose money on the next 10 picks. They could all go bankrupt, and we'd still double our money overall. I mean, when you have 15, 20 baggers, that forgives a lot of sins. You have to realize, and listen, I haven't had a bankrupt stock yet that I was loaded into. So I doubt it's going to happen. And with the smaller ones, it's not going to happen because we'll finance them and keep them alive. If they have assets that are there that merit us to support them, it's like, look at Timberline. Timberline's a situation where they had challenges with option payment earlier this year. We stepped up and funded them. We take our own risk out of the equation here. So in any event, what I'm saying is that if you want these type of ideas, I mean, this is what I do all day. I'm out here looking for deals, looking for ideas. It consists of basically three things. Opportunities that I think are going to beat the sector In the junior and mid-tier area, really overall allocation, gold, silver, long-term investing, things of that nature, what's going to happen with that part of it. Trading opportunities for those of you that like to trade. And then the big one for those of you that are a little wealthier is the private placement access. That in itself is enormous. It's something that, you can literally, today with what I'm saying, if you want to get into the club, you can join the club. And by the club, I mean that I talk to a lot of people. I know a lot of people. I get access to very, very, very good deal flow. And in fact, I choose the deal flow that I want to get involved in. I mean, I say no to tons of deals. I couldn't care less. Even if it was a marketing client of mine, which I don't take those super often, but if it is something I take as a marketing agreement, it's because I own the stock and I bought it myself. It's because I believe it's going higher. But if they want me to raise money or they want to continue a contract after they've screwed it up, I'll just sell it. I'll tell you to sell it. I don't care. I have so many different opportunities that come to me every week. It's ridiculous. I mean, I'm in a great position, and I think that based on my attitude in this sector, I'm not just looking to give you some ideas and make some money and blah, 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 back and forth, up and down. I'm here to get extremely wealthy. And I can tell you pretty much, I think for a fact, that's about what's going to happen for me. And I mean, I already do well, but I'm talking about making millions and millions of dollars and not doing it from a base that for some of you, I mean, maybe that comes down to tens of thousands or hundreds of thousands in profit. If you're a very new investor or small investor, that's okay. You can do exactly what we are doing on a higher level at your pace. But some of this stuff, probably half of the listeners have plenty of capital to take advantage of these different things. So I want to encourage you all to give it a shot. Get involved in the premium. Join it for the year. Just buy the annual membership. What do you have to lose? $500. If you're serious in the market and you don't take a gold newsletter up for idea flow in what is going to be a very powerful bull market, it's a stupid move. If you don't do it with me, go do it with somebody else. If you can find your own ideas, great. But if you can get even one idea a quarter or even a year that brings value to you, that you can go into and take a position in that you wouldn't have known about before, it pays for itself times, multiple. So I would just encourage you guys to consider getting more active now with the premium. What's going to happen, I can tell you, it's like clockwork. Gold shoots up. We're at $1,450 at the end of the year. Early next year, we're at $1,600. The junior mining stocks double or triple from here. And I have people pounding the door down, starting to join premium and join elite. Or probably not at that point they're even pounding it. It's going to be very robust, don't get me wrong. But as things go higher and up and up and up, new people are going to come in droves and droves and droves. And I'm going to have to start turning people down, which I've already committed to in the premium service, taking a limited amount of people as well as an elite. The elite service is as good as gone by January for anybody who wants to join that one. We've got a handful of slots because we actually just had a couple of people that have fallen off due to inactivity. And I cap it at 25 people. We have 5 or 6 slots. If you want private placement access and you want access to me 24/7 and you want to be in our true inner circle, join the elite. You've got to have some money to join it, but you don't have to have that much. If you have a 6-figure portfolio that's active in this sector, it's worth it. If you're a multi-millionaire who wants access to some deal flow, it's a completely it's a no-brainer for you to get involved with the deal flow access that we have. I've got 3 private placements coming up as soon as this month. One of them is a 5 million ounce gold play that's trading for pennies. And we're going to get a full warrant long term. Another one is a copper play that is trading for nothing, and we're going to get a full warrant. Another one is a silver play that is, nobody knows about this thing. It's got a $2 million market cap, and their properties are in the hottest area in the world right now, in British Columbia, and has gum near possibilities all written all over it. And we're going to get a placement in that one as well. So, listen, I mean, it's time to make some decisions, I think, on how active you want to be. And I think, just to wrap this up in a sense that this isn't all about what you do with the gold investment letter. What I want to encourage you to do today is, if you're even the most conservative listener, have as much physical gold. Like, just take a moment and envision the possibility. Take a moment and literally close your eyes and visualize what the world would be like if gold was trading at $2,500 an ounce and silver was at 80. Do you own what you would want to own in that case? Cut those down, and gold only goes back to the highs of 1900. And it takes 5 years to go there. It takes a little longer than I'm actually anticipating, but that retest is very likely. And so gold, back, or silver back at 50, and eventually that's going to break through those highs, by the way. But if that were to be the case, do you own what you would want to own at that point? Now is the time to visualize a very robust market instead of reacting to a very robust market and paying up when right now you can buy things very, very cheaply. You can buy GLD, for goodness sake, whatever. I mean, there's a lot of different vehicles that I use, and I gladly share that with all of you in terms of buying physical, in terms of buying it digitally and storing it, in terms of ETFs that actually have audits about the physical storage, discounts to NAV. I mean, these are things. Central Fund of Canada, CEF, great way for you to buy 60% physical gold, 40% silver. Those are a little bit different now. That's how they were before. I haven't looked recently, but it's a split of gold and silver. I think it's probably 65 gold, 35 silver. You can put millions of dollars into that and feel comfortable that they have the gold and that you can have exposure to the physical metals. You won't have the volatility of the junior mining stocks, or you won't have one company risk for some blow up because of an operational flub. You can own any of these different things to have physical bullion, physical gold, physical silver exposure. Now's the time to do that. Secondly, if you don't want to mess around with a lot of the little individual picks, like in the penny stocks and stuff, you can buy GDXJ, you can buy GDX, which are the gold mining ETFs that own pretty big companies. Even GDXJ, which is supposed to be a junior miner fund, has moved their criteria up quite a bit and is usually exposed to companies that are in the billions on market cap. And GDX is all large cap producers, and then you can buy a basket of diversified holdings and just sit on it. SIL, SIL is a great way to own the. I want to come back to that chart actually. It's a great way to own the silver miners, and they're the bigger silver miners. And let's look at where this thing was before. This was at 80 bucks. Now it's at 35. But you can own a basket. So what's most important is I want people that have any sort of an open ear to me based on what I'm suggesting. We'll see whether I'm right or wrong, but now's your time. Now is time to get more exposure. It's easy for people to take action when everybody's taking action. It's not easy when people are not, but that's how you make the money. That's the irony in this whole situation. I mean, if you're going to buy low and sell high and you want to buy something cheap, you're going to inherently buy it when other people are either saying it's crap or don't want it. We're not really in that environment. I mean, we've already had evidence last year that we're out of the woods on the bear market. Here's the second chance. This is the second chance opportunity. It's actually a lower risk situation than it was back here to some, and you're paying up a little bit, but you've got the evidence. So do anything. That's what I'm saying, is do whatever you got to do. If you want risk and big possible reward, I mean, even my multi-millionaire listeners, what I disagree with, especially if you're open to taking some risk, is shunning the small penny stocks. Because if even half of what I think is going to happen happens in this market, let's just say gold, let's just say you believe that gold's going back to 1900 in the next 5 years. Some of these juniors that are trading for 20 cents, 50 cents, 10 cents, 80 cents, whatever, that don't trade a lot of volume, they're going to be trading enormous volume in that environment. You can't look at the liquidity today and not keep in mind the improved environment for some of these situations, because this market has been dead for years. And when money flows into it, it creates liquidity. I think the people that shun the junior exploration stocks are really missing out. Let's just say you're worth 20 million bucks. If you're worth 20 million bucks and you put 50 grand into 20 different juniors, that amount of money now in the next 3, 4, 5 years could turn into 10 million bucks if this is all going to be correct. That's just how the juniors, like, that's how they act. This is the nature of it. They were down 90%. It lost 9/10 of their value, so that can happen as well. But they can also go up tenfold, and it happens all the time. In the juniors, when you look over decades, this is the boom and bust nature of this part of the business. So I don't care who you are, but maybe you don't want to put in the work, then you just go ahead and buy the GDXs of the world. But look, if you were to do that, say you put some effort in the next 3 to 6 months into putting at least 10 positions on through private placements in the open market, and some of these you can move up the scale a little bit. Once you have them on, you sit tight. I don't care who you are, but if you can increase your net worth by 50% by taking on this type of a risk with only, basically taking 5% of your entire net worth, that's what we're talking about here. So I think it's a mistake for a lot of people to shun the smaller companies, because that is going to be, it's not just for small investors. I mean, you look at guys like Eric Sprott, he's a billionaire, Rob McEwen, even Ross Beatty, Tom Kaplan, all these guys that Lucas Lundin. I mean, look at them. They're billionaires, and they have big stakes in companies like Orca, Southern Silver. McEwen's always doing deals. Golden Predator was 20 cents when he got into the thing last year and put in millions of dollars. I mean, these guys still play in the junior space because they know that that's where the real juice is. You don't put as much money in there, but when you hit, it can turn into a lot of money. So just a thought on that. And I'm going to wrap it up by saying that, some people watch things happen. Some people make things happen. And some people wonder, what the hell just happened? Don't be the last person, okay? And don't even be the first person. And only to make things happen, all you got to do is take some action. But I'm saying that now is the time to do that on some level, depending on who you are and what you have going on in your life in the gold and silver arena. We also have a situation where it looks like copper and cobalt and zinc and some of the commodities out there are coming into the early stages of what's going to be a very powerful bull market as well. We're going to be playing in all of it. Gold and silver are my core holdings, but I've been adding to a lot of these other areas, and I think it's going to get very exciting. The last thing I will say is that one of the things that has been missing to spark a big junior mining run, besides the price of gold and silver and the commodities cooperating, which they are now, they're starting to. Usually what happens is you need some sort of a big discovery that causes people to make a ton of money in any particular little junior that goes from pennies to dollars to tens of dollars to hundreds of dollars a share. That sparks a lot of activity off of the sidelines because people start to speculate more. You can see it, and I was going to get into it with the CDNX, the Canadian Stock Exchange, which looks fantastic. I think the CDNX is going to go up 50 to 100% in the next few years. There's a lot of evidence for that. But one of the things that's happening right now, we saw clearly with everybody's been hearing about this Novo Resources with a discovery out in Australia. This thing really took off. So we're talking about July. It was under $1, and it's gone up 4x, basically 5x in 2 months, month and a half. So people are talking. I'm not involved in that one, by the way. I think I mentioned this before. I mean, we're talking about a $500 million market cap, and they don't have any evidence of a resource. It's very interesting, and it could be huge. Don't get me wrong, but I would rather be involved a little bit earlier or have more evidence to get in at this point. And that'll come. I think it'll come pretty soon. But the other thing that's happening is the Golden Triangle in British Columbia is starting to see the same thing and could be as big or bigger because it's going to be multiple companies. Look at Garibaldi. I found out about it right here. So in July, I mean, we're talking about 6 weeks ago. I bought a tiny bit for myself. I didn't have a bunch of cash laying around in my Canadian account, so I bought a little bit, and then it popped. And I looked at it, and your inclination is just to say, I missed it. But I don't do that because I know that there are a lot of situations where you need to just adapt and adjust. Just because you missed the low does not mean anything, really. What if they have the biggest deposit known to humans, and it's going to go to $20,000 a share? You don't know yet, so you have to keep an open mind what it is. So in this case, I got the premium members involved here, which was in the mid 20s. It was about 25, 26 cents when I put this out and said, you still have time to get into this thing. And it's just taken off, but it wasn't a firm recommendation on my side because I found another one next door that I like a lot, is even more so, and that was the case where this one was actually here. I'm sorry, I don't think it was Garibaldi that I told subscribers about it, but didn't recommend to buy it. Natalis I did, and I said, you know, it's worth a shot here at 25 cents, and then boom, basically doubles in a couple of days. On this pullback though, the more that I learn about this area, because this one's got nothing, there's no stock out there, it's like a $6 million market cap. You know how high something can go with, you know, like just zero, 15, 20 million shares outstanding? It can go very, very high. So in any event, I said, look, it's still worth the speculation here. And now there are things that are happening with a few other companies, with a few other companies in the triangle, like GT Gold, which just came out with a very nice high-grade discovery, 40 cents to 219, so 5.5 times your money since July. What else do we have up there? I mean, they're all moving. They're all popping. This one not as much, but a lot of them are starting to really rocket, and you're seeing it all over the place. There's another play up there that we have exposure to a lot cheaper in premium on the silver side, which has been hitting big time high grade. The stock is going to fly. If you want to get some of these picks that are still yet to really get going, I mentioned it last week. You join premium, I'll give you 2 silver junior plays that nobody's watching. A little bit on this one now, but still has a ton of upside. And 1 junior gold royalty play trading for nothing that has millions in cash and is cash flow positive. This stuff is going to be, they're going to perform in a stellar way. I'll get you those picks right away so you can start getting going. And then you're going to be in the game with us as this stuff comes up. You guys are in the game too, and I'm going to continue to give out, I think, valuable information and picks. But you know, if you're buying into what I'm seeing here, it's time for you to give it a shot and upgrade. So yeah, what I'm getting at is this golden triangle situation is something to watch. Could really spark the junior market. If this continues, I expect really interesting drill results and assays starting to come out. There's going to be a ton of news out of the juniors in September. They've been drilling and sitting on news in the summer gold. I mean, there's a lot of fuel here to this thing. So I would suggest that after digesting this video, you know, give it some thought in terms of, are you well enough positioned in this sector? Do you want to take a lot of risk, a little bit of risk, maybe a middle of the road risk, and then figure out what that looks like for you and start to take some action next week. You don't have to do everything all at once and pull the trigger and buy everything on Tuesday, but you should be buying something on Tuesday and start to put these positions that you would want on in a much healthier marketplace. And I'm just telling you right now, that's what's coming. Gold's going a lot higher, so is silver, and junior mining stocks that we have picked, that are, some of them are already up 10, 15 times, are going much higher as well. I hope you're all having a great weekend. Take care.